Hey folks, thanks for tuning in to this week's option trading challenge, where I try to make $10,000 in 1 year trading only Google options. So here's my progress so far after 2 weeks. The first week, I made $232. That was kind of expected, but in the second week, I made over $1,000, which is much better than I expected because I'm basically 14% of the way there, even though I still have many months left. But options can be quite volatile, so this big gain here could be short-lived. We'll have to see what happens, but I'm going to explain this graph here and what happened last week, how I made the $1,000, and place the trade that I'm going to do for week 3, which is for this week. So last week I had a couple of short strangles for $220 each after commission, so that's $440. And using the US to Canadian conversion of 1.29, that gives me 568, which I've plugged in over here. And I did mention last week that that was a special time because implied volatility was so high for Google since that was earnings week. So I wanted to take advantage of that. It was a high risk move because the stock could have moved up and down wildly and I could have lost money there, but fortunately it turned out well and it worked out in my favor. My short strangle spread was between 104 and 121, which means I wanted Google to finish the week within that range. And fortunately, it did on July 29th, last Friday. Google closed the day at around 116. And because that was between the two numbers that I was targeting, both of the options expired worthless. So I was able to capture 100% of the option premiums. And in the previous week, the first week, if you remember, I actually picked up 100 shares of Google. And what happened last week was the stock price went up from around 108 to 114 by the end of the week. So the shares that I owned grew by $622. So that's why if you add the option premiums of 568 plus the capital appreciation of 622, you get over $1,000, which is why my total profit now, both realized and unrealized added together, is 1422. So for this week, because implied volatility I think is going to be lower, I'm going to be a lot more conservative. And even if I don't make like $100, I think that would still be okay because as long as I make an average of $200 per week, then within 50 weeks, that's kind of my goal, is up to 50 weeks, then I will hit my $10,000 target. So I'll briefly go over what this chart represents and how I'm tracking everything. And then I'll talk about the current trade that I'm going to make for this week. So this section here, these columns are for the option trades. So this is the weekly net premiums that I made. So if I sold options and then I bought them back by the end of the week, then I would put the net amount here. Next one over is the total premiums that I've accumulated from this week and the previous weeks, and then the implied volatility of the options during that week. The next section here is about stock transactions. So if I get assigned a stock because my put was exercised, or if my stocks were called away and I had to sell, that would all go in here. So in the first week, I got assigned 100 shares at $108 per share. So I put that in here because I do want to track the overall capital gains and losses of the stock as well over time, which is what this whole section here is, the mark-to-market stock performance of the current holdings that I have. There aren't any options that are carried over from week to week because I only do weekly options. Like I sell the option on like a Monday or Tuesday, and then I let them expire or I close them out on Thursday or Friday. So I only do weekly options for this challenge. So the mark to market is only for the stock part. So the first week, basically, this was the loss that I took after I got assignment of those 100 shares. But getting assigned is not such a bad thing, especially when the next week the stock goes up. And by the end of week last Friday, Google was trading at 114, so that is much higher than my purchase price of 108 times 100 shares gets me that unrealized gain loss. So if I get this called away, then it will turn into a realized gain loss. And then my total profits here, this is all accumulated. So we'll have to see what happens this week when I put in the trade in a moment here. And then this graph is just basically showing what's going on with my spreadsheet. The blue line here is my total gains and loss. If this reaches 10,000, then challenge complete. That's what I'm looking for. The purple line is just the net option premium. So it's really just this column here. Like if I take away the capital gains and losses from the stocks, if I'm just looking at earning options, then that's what the purple line is. And then the yellow dotted line is just like a reference point telling me that I need to make on average $200 per week in order to get my $10,000 target by 50 weeks. And right now I have this set at 9 weeks, but this would continue on to 50. So I'll extend this chart as the weeks go by. So now I'm going to place in the trade for this week, for week 3, and see what happens. Looking at the 1-day range, and I'll just turn this to candle. Okay, so we're having a huge spike here, and it looks like it's not alone. The index is doing this as well. All right, so how high can this go? Well, we do have some peaks over here, which was from yesterday. So it's possible that Alphabet could continue higher, pass through these. And if it does that, and I'm thinking by the end of the week where it can go, let's look at a 5-day chart and just zoom out a little bit. It looks like the highest point that we've seen over the past little while is the 116 mark or 117. So that's probably where I want to set my strike price for selling the call option. And in terms of maybe selling a put to get some more premiums, I'm not quite sure where I can set a good target for that. Maybe this point right here, which is 109. Okay, so let's go with around 117 and then 109 and see what kind of premiums I can get. Okay, so looking at interactive brokers here, I'm losing a little bit of money currently for today, but it's not too bad, just down 0.43%. And if I look at the option chain for Google, and I go to the August 5th expiration, which is just 3 days away, so it's not too far away. And I go to the 117th. Okay, so I can make some money here, but the IV is so low. You can see it's only 30.9, so that's less than half of what it was last week. It looks like 118 is right up near the edge, 118.5 before it goes into like a over 1 standard deviation. So maybe I will sell the call option here. I'm going to turn on Strategy Builder, set the 118 sell, and then for the put option over on the right side, looks like I'm not going to get too much. That's $10 if I do a 109, but it's at 115 right now. It can easily fall to 109 by Friday. So that might not be worth it. If I go to 107 or 108, you can see the options are so cheap right now that it's probably not in my best interest to actually sell these, because if I sell, let's say, the 108 and I make like $7, well, if by Friday and this falls to like 107 or 106, which is very possible, then I would either have to close that option for a major loss, like a $100 or $200 loss, or I would have to get it assigned. And the last time I was assigned 100 shares of Alphabet, it was at a strike price of 108. And that was a couple weeks ago. From then until now, I don't think there's any reason for the stock market to be more bullish now than a couple of weeks ago. So to me, it's not worth it to buy 100 more shares at 108. I would have to buy it at a cheaper price, like 107 or 106, in order to be happy with that purchase price, because then I would be averaging down. But at 106, you can see I'm basically not making any money there. That's barely going to cover the commission cost. So what I'll do is just have maybe let's go with 2 call options at the 118 mark. And I'm going to choose a price of maybe the ask, which is 37. I'll submit the order. So I'll only make $72 if this goes through for this week. But that's fine. I'm kind of waiting for the stock price to move a lot more before I be a little bit more aggressive with my options trade. So this is, let's go down to 36.
Order filled.
And okay, so there we go. It just filled at 0.36. So if I go back to interactive brokers and under option here, I can see my new Google call. This is at 118 call, and I have 2 positions, and my average price is 35. This is after commissions. So that's $70. So if I go back to the spreadsheet here, $70 using the current exchange rate, that'll give me $90 Canadian. So I'll just put that in here. So if I don't close this position, like if I don't buy back my call options, before the end of the week, then I'll just leave that at 90. And maybe it'll be assigned, maybe not. But if it gets assigned at 118, then that's not a bad thing, because a couple weeks ago I bought it at 108. So if I can sell it for $10 more, that's $1,000 realized profit. So looking at the stock, it's currently trading in a range. So we have this channel here that's roughly going this way and this way. It's kind of going sideways, and it's just bumping up and down between these two lines. And if I turn on the Bollinger Bands, so you basically have this light orange highlighted track here that the stock is going. Now, eventually it'll have to break out of this. I just don't know which side it'll break out from. But for the moment, it feels like it's going to continue within this range for quite a while. So that's why I feel comfortable with the 118 call on the top side. The bottom side, 104, 105 is down here, so it could fall that low. However, as we've seen in the option chain, you can't really get any premiums if the strike price is like 106 or 105. So there's no point in selling a put option down that low. Like I mentioned last week, I was expecting this stock to go down. It looks like it's starting to go down, but now it's up a little bit today, so it's pretty much flat. But by Friday, I do expect my negative bias to still hold and for the stock to be lower. So we'll have to wait and see what happens, but hopefully it ends the week under 118. That's my call strike. And if that happens, then I keep 100% of my premiums. Nothing gets called away, so I don't have to make any stock transactions. And then I can continue on with my week 4 trade. Hopefully that gives you some insights on how to trade options. Keep in mind, don't feel like you always have to put in a really aggressive trade. Like, you can take advantage of implied volatility when that happens and you can make a lot of money. But in most cases, especially when you're not sure which direction the stock is going, it's okay to play a little bit defensively. Like this week, I'm not making that much money. That's less than $100, but I'm okay with that because last week I made up for that. So keeping your temperament in check and just realizing that with options, it's just like stocks. If you want to consistently be successful long term, you have to think about your whole progress long term. And that's why tracking everything is the first step to doing that, is so that you can see your progress over a longer period of time and you can know what's working and what's not. So it's only been a couple weeks. Let's see how week 3 turns out. Thanks a lot for watching, and I'll talk to you in the next one.